Okay, evening everyone. I hope you are all doing well. I think my mic is a bit low. Let me just do this. Give me a minute. Okay, so I think my voice would be a bit better now. Okay, so let me just remove this. Okay, so before we start, right? Just to give you guys a background knowledge of what we are dealing with today, right? So I'm not necessarily going to go deep into the principles of this question, uh, but I just want us to focus on the attempt of this question, rather, right? So um, let me scroll down. We would be looking at A, right? So we would be looking at A. Let's read the required first before I start explaining. Now, A says Scottani is considering using only one sales channel and close down a channel with a lower contribution per unit between two channels, right? So meaning that one channel will be closed with the lowest contribution. Please give me a minute. I just want to close the door. Okay, so one channel needs to be closed, right? So the channel that we are closing is the one with the lowest contribution. So this is something that we need to take note of, right? So the sales channel with the lowest contribution would be the one that is going to close, right? Okay, so now, meaning that we will be calculating the contribution for these two channels separately to determine what? To determine the channel with the lowest contribution, right? And then now, um, the first required of A, it says we need to calculate the budgeted contribution of each of the two sales channels. And we would advise one, if any, of the two channels that would be closed, right? Or that Scottani should close down. So now, in order for us to take the decision on this, we need to get the lowest contribution, right? Okay, so we move on to required number 2 of A. It says, assuming that Scottani uses the retail store sales channel only, we need to calculate the budgeted margin of safety percentage for the 2018 financial year, right? So for the 2018 financial year, what we also need to do is to calculate, no, rather to discuss the qualitative factors that Skotani would consider if they were to sell via online sales channel, right? So, uh, technically, we would be looking at what the budgeted contribution, right? So, meaning that this actual result we are not going to take a look at, right? The business acquisition proposal, we are not going to look at it. So what we are interested is the cost that form part of our variable cost, part of our sales. Practically would be looking at the whole of A1, rather not A1, right? So now, before we comment with the question, right? So one thing that I want you guys to understand, right? When we are dealing with contribution, right? So now, contribution consists of sales less variable cost, right? So this is the fundamental of contribution. So now contribution is the selling price less the variable cost, right? So in the chat box, who can tell me what is the variable cost? In the chat box, what do you think is the variable cost? This is not a difficult one, guys. This is not a difficult one. So here we are looking at an expense or a cost that changes as what? As production level changes, right? Or with the direct proportion of the level of production, right? Cost that changes when production level changes, right? So when production level changes, right? So these are variable cost. Now, moving forth, we would be looking at what? We would be looking at the logic behind contribution, right? So essentially here it is when businesses make short-term decisions by assessing how their product contribute to covering their fixed cost, right? So this is the logic behind contribution, right? So then the contribution margin or contribution, um, it is essentially just to determine the profitability of an individual product, right? Normally, when you are dealing with contribution, you would also want to you make use of a break-even analysis, right? So now, companies would want to use the contribution margin to calculate what? The break-even, right? So the break-even is essentially where the business does not make any profit or loss, right? So this is part of your CVP analysis, right? So now, um, essentially, you as a management accountant are needed for decision making in a business, right? So we are going to make a decision of which product should close, right? So in order for us to make that decision, we need to determine the company that is making the lowest contribution. I mean, the product that makes the lowest contribution, right? And with the contribution model, our main focus is on the variable cost, right? Because of this one is the one that's going to affect the profitability of a product, right? So now let's dive into the scenario. Okay, so now the scenario says Scottane, Scottane Ltd is a boutique shoemaking company owned by two prominent entrepreneurs. The company's year end is the 31st December and it operates for 220 days during each financial year. It uses the variable costing system and all its inventory items are valued using the FIFO method. Scottani specializes in the manufacturing and selling of adult size, um, limited edition high-end crocodile leather shoes, therefore called Croc-Velas. These shoes are made from the leather of an endangered crocodiles of the Nile River. Croc-Velas are only sold as a pair, so we need to take note that they are sold as a pair. Should you given the number of shoes in individual quantities, you should take note of this, right? It therefore allows a pair of shoes packaged in a shoebox equivalent to 1 unit. So when they mention 1 unit, they are talking about a pair. Croc-Vela, a constant trending name on social media, is a local-based brand name of choice amongst the South African socialities and the high-ranking political figures. So now we are given the 2018 and 2019 budget, right? So 1.1, it says the maximum shoe manufacturing capacity is 3,000 units per financial year. This level will be maintained for the foreseeable future. In order to maintain the exclusivity, a limited number of units are manufactured each financial year. The number of budgeted units to manufacture and sell during each financial year is linked to the numerical description of that calendar year. For example, in calendar year 1998, the budgeted manufacturing and sales units were 1,998. Let me just accept the people. Mm. Okay, so for example, in calendar year 1999, the budgeted manufacturing and sales unit was 1,998 only. In calendar year 2000, the budgeted manufacturing and sales units were 2007 only, and so forth. This calendar year linked manufacturing and sales trend to be well maintained until the company reaches its maximum shoe capacity, right? So in this current year, we are budgeting 3,000. So I think that's the most important statement there. So with regards to 1.2, Scottani sells Crockvellas via two sales channels at each of their three retail stores in Gauteng province, one at OR Tambo, and there's another one at Mall of Africa, and there's another one at Main Lane Mall. And again, they will also sell at an online store, meaning that they sell in physical stores and an online store. The company's contribution margin is 60%, right? Okay, they are giving us the manufacturing process of this company. This is crucial for us as this is where our variable costs, or most of them, are going to come from. So crockvellas are handmade from start to finish. The process starts with the buying of the crocodile leather at 5,000 per meter, 450 millimeters. Crocodile leather is used in the manufacturing of one shoe. Scottani employs 25 men, only shoemakers, some as young as 13 years. Standard direct labor clock hour rate is 10,000 per hour. Not 10,000, 10 rand per hour, sorry. The daily standard clock hour, or the daily standard clock hours, and the related idle time is 11 hours and 2.2 hours per shoemaker. It takes one shoemaker 12 productive hours to fully complete one shoe. Shoelaces are bought at 35 rand per shoelace. Each shoe requires 125 milliliters of specialized glue at a cost of 37 rand 50 cents per shoe. Once the leather is sewed and glued together, one rubber sole of 50 rand is attached to the shoe or to each shoe, followed by, so we have to make note of this one rubber sole of 50 rand, followed by a 350 millimeter inner sole bought at 450 per meter. Lastly, the shoe is quality inspected and polished at a combined cost of 5 rand per shoe. So the inspection and the polishing is what? Is 5 rand per shoe. So all the wastage that occur during the manufacturing process are immaterial. So each pair of shoes is packaged in one shoe box. These shoe boxes are currently bought from the Bemba place, a Nigerian-based shoe supplier. The standard cost per shoe box quoted by Dibemba is 4,000 naira. So we need to make note of this. The standard cost of one shoe box is based on the exchange rate of Nigerian naira to South African rand of 1 naira is equals to 0.005 cents. We would now look at the manufacturing overhead. So the manufacturing overheads include both variable and fixed portions. These portions are calculated by reference to the observations of the previous financial year's manufacturing costs and activities. During the 2017 financial year, the highest manufacturing activity was 220 units in April, with manufacturing overheads of 135,000, while the lowest manufacturing activity was 50 units. In December, with manufacturing overheads of 50,000, although the variable portion will remain at the level, at the 2017 level, on the 1st of January 2018, the fixed portion is budgeted to increase at 6.5% from the 2017 level, and that's interesting. 1.5, online selling distribution cost, right? Online selling and distribution cost. So Skotani has contracted the distribution of the shoes to veterans, VCC rather. The agreement provides for both variable and fixed distribution costs. This distribution contract is renewable every 3 years. The latest renewal was on 1st January 2018 at fixed distribution cost of 150,000 per month. So this is the fixed cost. So Skotani pays 400 per each unit sold online for the delivery to the customer door. So 1.6. The company leases 2,000 meters squared property from the Eastern Cape Provincial Government and uses it as its factory plant. This property is located in a poverty-stricken and one of the most rural areas of the province, with the unemployment rate ranging from 60 to 85%. The lease agreement is for a period of 99 years and provides for monthly fixed payment of 25 rand per meter squared for the entire lease term. As at 31st December 2018, similar market-related leases were at 150 per meter squared per month with an 8.5% rent escalation clause each year. Monthly rent expense for the retail stores are budgeted as follows. So this is the rent. So 105,000 per month at the OR Tambo International Airport, 100,000 per month at the Mall of Africa, 85,000 per month at Main Lane Mall, staff related cost of 25,000 per month for each of the 3 retail stores. Okay, interesting. So now, what are we going to start with? We are going to start by calculating our contribution. And before you could do that, you are definitely going to need what? You are definitely going to need your sales price and variable cost. You cannot calculate contribution without those, right? It is very almost or impossible rather, right? So we are going to split the retail channel to the online channel, right? So we would have a retail, let me just use a different color. So we would have a retail store, and then we would have an online store, right? So now, sorry about that. So I don't think we are going to have that much of a great column because of the trick is that if we group our variable cost, then we would have a shorter calculation, right? That shouldn't be a problem. Or for the sake of your guys' understanding, right? We could do a long column so that you get to understand this process. Okay, so now let's start. So what are we starting with? Obviously, formula first. What's our formula? Sales price less variable cost. Let's go to our required just to confirm that we are doing the right thing. What are we doing? We are calculating the 2018 budgeted contribution per unit for each of the two sales channels. So the first one being the retail, the second one being the online, right? So now what is going to happen is that we would have a sales price or SP should be the quickest. So we need the sales price of the retail as well as the online store. So now I want you guys to help me with the answer. We have a contribution margin of 60%, right? So for those who don't know what a contribution margin percentage is, this is essentially contribution margin over the selling price. So the contribution margin ratio is essentially contribution margin over selling price, right? So now, what will happen now? Maybe this one might be a tricky one for you guys. Okay. Maybe this one might be a tricky one, or anyone who has the logic of what we can do. Okay, I'll bear with you guys. I'll bear with you guys. Let's start with the variable cost. Let's start with the variable cost as the selling price might be challenging for you guys, right? Okay, I'll bear with you. We're not ignoring it. We are packing it. So when you're writing a test and you get stuck or something happens, pack whatever that seems to be tricky at that moment. Continue. Go and get your free marks. You'll come back, right? You will definitely come back. So now let's move on. So yeah, obviously we would be looking at 1.3, right? So they are telling us that they buy crocodile leather. So they are buying crocodile leather. So they are buying crocodile leather. So now, what is going to happen with the crocodile leather they are buying? They are telling us that 1 meter of leather is going to cost them 5,000, right? So 1 meter of leather is going to cost them 5,000 rand. So 450 millimeters of crocodile leather is used for the making of one shoe. Remember, these shoes are identical. The only difference here is that one is being sold in the online store, one is being sold physically in the retail store, right? So with this crocodile leather, we would now take, let me do the calculation for you guys. Now, we would take 5,000, right? Now, you are only interested in 450 millimeters. And this 5,000 represents 1 meter. 1 meter is 1,000 millimeters. So you could simply multiply by the 0.450 millimeters, or you could multiply by 1,000 over 450 millimeters. Whichever one that you do, you are going to be fine, right? Remember, costing is not about formulas. The only formula is this one's the break-even formula, the margin of safety formula, the rest. But costing is mostly more about how can you read and interpret the scenario and be able to make an informative, quantitative decision based on your thought process, right? So you are taking a scenario, putting it in your thought process, taking your thought process, putting it into numbers where you can make a decision, right? Numbers, you are going to use a system that is going to be applicable or a system that you can explain to someone. Normally, we would be using similar systems because of we are calculating variable cost, and the scenario would be provided in a way so that it can guide us, right? So now let's take this 5,000 multiplied by 0.450 millimeters, and then we would now multiply by 2, right? We would multiply by 2. Why are we multiplying by 2? It is because of we are dealing with a pair, right? So we are dealing with a pair, and this pair is representing 1 unit. So we are calculating the contribution per unit. That's why we are multiplying this by 2, because of we want all amounts to be in units. Our selling price would be in units. So I am going to match apples to apples. So my calculations should be similar, right? Okay, so now um, let's do the calculation of this. So we would take this 5,000 multiplied by 450 multiplied by 2, right? So this gives us what? 4,500. So this gives us 4,500, right? So this is our variable cost of crocodile. Remember, the cost would be the same for the online and the retail, right? The cost would be the same, no difference. Now, we would be moving to the second point. Remember, this scenario is provided in one paragraph. You just have to put your eyes to this scenario and uh, be slow to move during your reading progress, right? Be slow to think, but be fast to answer, right? So the thought process is what most important in costing, rather than you answering the questions very fast. Because of it's easy to just answer everything and finish quick without even passing the paper, right? It's rather to finish 90% of the paper and then pass, rather than to finish everything then fail, right? So now, um, Furthermore, it says Kotani employs 25 men. So these are shoemakers, direct laborers. The examiner is telling you direct laborers. So meaning that direct laborers are included in our variable costs, right? They are 25 and they are using a clock rate. So it means that they would be earning per hour, right? And now it takes one shoemaker 12 productive hours to make one shoe. So be careful. One shoe, not one unit, not a pair. Something to think of there. So I am dealing with direct laborers. Direct laborers. Right. So that part is direct laborers. Interesting. So after I am given those direct laborers, what am I going to do? I am now um, going to take the rate that is paid to the laborer of 10 rand, right? What am I going to do with this 10 rand? I am now going to multiply it by the number of hours that one shoemaker requires, right? Taking into account the idle time. It's a very crucial element to take into account the idle time because of now, as much as you can impress someone that works 12 hours, they are not working the 12 hours, I can promise you. No one can work 12 hours straight. And not even 12 hours, no one can work 5 hours straight. You could find they would spend 10 minutes chatting to their colleagues. Some they could take 30 minutes being on their phone. Some they could go to the bathroom forever. Some might run away from work, etc. So we are going to take into account the idle time, right? So now, if 12 hours is what we want, 12 productive, right? So this is very crucial also. 12 productive, not 12 hours worked, right? So that is very crucial also. So now, what I want from you guys is the thought process of this one. How are we going to answer? What is going to be our direct labor cost? So that's what I want from you. And one thing that I can tell you is that we are looking for a pair, right? So as we are looking for a pair, we could multiply this by 2, right? So now, what's going to happen? What am I going to multiply with? I want answers from you guys. I want answers. Okay, let me just come to the mystery. Not mystery, let me come to the rescue. Yeah, let me come to the rescue as no one is brave enough to give us an answer. Right. So now, what we are going to do? Yeah, they are telling us, right? They are telling us that these people, they work 11 hours, of which 2.2 hours is idle time. So I am going to take the 2.2. Let me just increase the font. So I am going to take the 2.2. I'm going to divide it by 11. So it gives me what? 20%. Right. So this 20% is the idle time. Right. So now, what does it mean? What does this mean now? It means that 80% of these hours are the productive ones. So I am going to take my required hours, the 12 hours that I require to make one shoe. And I am going to divide it by what? By the 80%. Because of those 12 hours, right? I need productive ones. That's why I'm going to increase this amount. And now this gives me 300. So this gives me 300. Right? Now we are going to move on. We have what? What do we have? What's our next one? We are told about shoelaces. Yeah, shoelaces. You see, shoelaces. Let me just highlight it for you. Shoelaces. So, with regards to shoelaces, what we are going to do, right, is that, Tuto, can I take your question before I
Yes,
continue?
please.
Yes.
Can you just repeat this idle time? You say we are given 12 hours. Okay, they worked 11 hours, right? And out of the 11 hours, we're taking out the idle time.
Yes.
But it further says it takes one shoemaker 12 hours to. I'm just
Okay.
very confused between the 11 and the 2 and the 12.
Okay. No, let me break it for you. Right.
Okay.
So now, um, let me choose a different color. Right. So now they are saying that daily clock hours. So meaning that the hours that they can record on their timesheet is 11 hours, meaning that in a day, these people, they record 11 hours, so not 12, they record 11 hours, right? So as they are going to record 11 hours, it means out of this 11 hours, they are not going to work this 11 hours, right? As I said, 1 hour might be for lunch, 1 hour might be for what, another 30 minutes of going to the bathroom, another 30 minutes of them being on their call, right? So
Mhm.
they are telling us that one shoemaker requires 12 productive hours, right?
Okay.
So Out of this 11 hours, how many are productive hours? So we would take the 11 minus 2.2. 11 minus 2.2. This gives me what? 11 less 2.2 gives me 8.8. So 8.8 hours are productive hours, right? So that yeah, they are telling us that we want 12 productive hours. So we want hours from this 8.8, not the full level, because of this full level includes the 2.2, right? And now, if we put it in a percentage wise, if we say 8.8 over 11, it gives us 80%. So 80% of their time, they are productive. So if we need 12 productive hours, right? So if we need 12 productive hours, it means how many hours do we need in total, including the unproductive hours? So what's your thought process on this one, Tutu?
If
We need 12 productive hours.
yes,
What
and
are we
then
going to do to get 12 productive hours? Because of we can't just say 12. Because of this 12 will include 20% that is unproductive. So what are we going to do?
then we're gonna use what's required, then multiply by the 80%. That's what we need.
We divide because of we want to cross it. We want to bring it
Divide,
up.
sorry. Divide,
Yes,
yes.
we want to bring it up. Does it make sense?
It does. Thank you.
Okay. So we need to bring it up. That's how we divide by the 80% productive hours. So this would give us 15 productive hours, right?
Okay. Thank you.
Does it make sense?
It does. Thank you so much.
Okay, pleasure. Bukeka, can I take your question?
Good afternoon, sir.
Afternoon, how are
It's
you?
not a question per se. I just want to see whether I'm right.
Yes.
We are when they said it's 12 hours, we are not we don't times with 60 because it's hours, not the minutes.
Yes, it is
So when we
hours,
are
not
given
minutes.
hours, we don't divide by 60.
Nope, you only divide if you are looking for minutes or you want an answer
Oh,
that's in minutes. Yeah,
all right, sir. Thank you.
pleasure. So now with the shoelaces are very straightforward because of they are telling us that one shoelace is brought at 35 rands. But we know that a pair needs two shoelaces, right? So I'm going to take this 2 multiplied by the 35. This gives me what? 70. So 70 rand would be per pair, and our unit is in pairs. So now our shoelace would be the 70 rand. Same applies to the online store. This would be 70 rand. Okay, great. So we are done with the shoelace. Now, what are we dealing with again? So each shoe requires 125 millimeters of specialized glue at a cost of 37 rand 50 cents per shoe. Right? So now, each shoe, very important. Each shoe, right? Very important. So we are also going to multiply by 2, right? So now we are dealing with the shoe glue or glue. So with this one, we also need to multiply by 2 right? And now we are told that it is 37 rand 50 per share. So very simple. I mean, not per share, per shoe. I don't know why I'm talking about shares. 2 multiplied by 37.5, right? So 37.5 multiplied by 2. So this is 75 rand. So with the online store, it is also 75 rand. Now, we are going to move on. So now it further states that once the leather and the glue, once the leather is sewed and the glue glued together, or once the leather is sewed and glued together, one rubber sole is 50 rand. So here it is very simple also. So a pair of shoes requires 2 soles, so we would also multiply by 2. Right, so we would take the 2 multiplied by 50 rand. So this gives us 100. And then now we move on. Lastly, the shoe is quality inspected and polished at a combined cost of 5 rand. Right. And I also skip this inner sole. This inner sole I skipped it, but okay, we can do the polish, the inspection and polish. So the inspection and polish, very straightforward also. So each shoe is 5 rand, polished and inspected at 5 rand. And we will multiply this with the 2. So this gives me what? The 10. 10 rand, yeah, and 10 rand, yeah. All right, so that's what we get. Now, we move on to the inner sole we had skipped, right? So, with the inner sole, we are told that the rubber is followed by a 350 millimeter inner sole, which is bought at 450 per meter. We are looking for millimeters, right? So we are looking for millimeters. So what am I going to do? I am going to take this 350 over 1000 millimeters because of it is bought in meters, right? And then I am going to multiply by the 450 and then multiply by 2, right? So I definitely need to get the correct answer. So we arrive at an answer of 315 rand. So our answer here would be 315 rand. Right. So that's what's going to be our answer. This one should be multiplied by 2. I made it a typo here. So now you are going to add all these amounts together, right? But before we can do that, let's check further if there are no further variable costs that we have to consider, right? So now, let me just do this. So each pair is packaged in one box, and obviously the box it's one. You cannot package one shoe on the other box and one shoe in the other box. That is not realistic, right? So you would package both of the shoes in one box, right? So now the shoe box would be what? The shoe box would arrive at an answer of um, unfortunately, this thing is given in Nairas, right? So this is given in Nairas. So what are we going to do? We are going to take this 40,000 Nairas and multiply with the exchange rate at spot date, right? So dates are not provided here, so it's fine. We will just multiply the 0.005 cents, right? So now this gives us 200. Right? That gives us what? 200. Now, I am going to add everything together. So what I get on the left and on the right would be fine. But now, before I can do that, let's also check in manufacturing overheads if there are no further variable costs. Right? So we are told now there was a lowest manufacturing activity of 50 units. When I see this amount at all times, I don't know, I'll have to start thinking of the high and low method. I I always think of the high and low method. I am given the highest manufacturing activity of 220 units. I'm given the lowest manufacturing activity of 50 units. I mean 220 units and 50 units. So high, low, highest manufacturing activity, lowest manufacturing activity. This in my head is a high and low method. So with the high and low method, what you do, you would write the highest unit at their price of 135,000, and then you would write the lowest unit, which is 50, and its lowest price, that would be 50,000. What are you going to do now? You would minus now. You would net 220 less 50 units, right? So this gives me what? So this gives me 170 units. This is 50,000. So now this would be what? 135,000 less 50,000. This in my head, so this would be 85,000. You can correct me if I'm wrong, those who calculate the amount. So what are you going to do? Now you're going to use the famous mathematic formula. So what is the famous mathematic formula? It is the y is equal to mx plus c, right? So we are going to use this formula. So y is going to be our rent value. So you can choose between any of the amounts. So I would take this 135,000 and we will now equal it to m. M is our variable cost, right? M is our variable cost. So this high and low method that I'm using, it's the long drive, but it works. So our variable cost essentially is the 85 divided by the 107. So that would be our variable cost per unit. So 500 is our variable cost per unit, right? So With the high and low method, as much as we already have our variable cost, which we are going to put here, do not stop once you have your variable cost. Continue because of you are going to have your fixed cost, right? It is always advisable to continue at that point because of now you're going to come back to this. It's going to waste you time in the long run, right? So the variable manufacturing overhead, we do know that it is 500. We put it here. So the reason why I am stating this, as continuing with this method, it is because of you don't know what's going to happen down there. Maybe something might require a fixed cost calculation. You don't know. So it is better to finish it while you are still here. It won't take you that long. It won't take you that long. Trust me, because of you had done the calculation. So all you just have to do is put the 500 there, and then the X would be the unit of 220. Remember, we are using the cost of 135,000. So this would be 220. And then the C is the fixed cost that we don't have, right? So now, if we are going to solve for C, right? So if we are going to solve for C, we would say C is equals to, let's see. So this is going to be 35,000 units. So our fixed cost would be 35,000 units, but you park it there. You don't do anything with it in the calculation of contribution. You park it. You'll use it whenever you need it, right? So we are now going to get the sum of this. We are now going to get the sum of this. So we are going to take the 4,500 at the 300. So everything is going to be identical here, right? And also there is 1.5. Why didn't I look at this? 1.5, there is variable cost because of selling and distribution is normally variable. But let's read it. But it's not a trend smash. Scottanes contracted the distribution of shoes to VCC. The agreement provides both variable and fixed cost. This is what I'm talking about. Variable and fixed cost. So fixed costs are given 400 per unit for items sold online, right? So now we are going to have a selling cost. So variable selling cost for items sold online of how much? Of 400, right? So yeah. Now let's continue with us adding the amount. So this is 6,070. So we do the same on the other side. 4,500 plus 300 plus 70 rand plus 75 rand plus 100 plus 10 plus 315 plus 200 plus 500 plus 400. It gives us an amount of what? 6,470. So now this is our variable cost. Now, you see we have gotten marks. We have gotten majority of the marks, almost 80% of the marks. But we haven't solved for contribution. This thing of sales stopping you from getting answers should stop. Now, we will come back to the sales. At least we would have gotten marks. Right? So what are we going to do with sales? We are given a contribution margin. We are given a contribution margin of 60%. So this solving it, it is a bit of a higher level. That's why I packed it, right? It is a bit of a higher level. So if you are given a contribution margin ratio, for, let's take, okay. So if you are given a contribution margin ratio, what you can do, right, is for the retail, right, for the retail, we would take the cost, the variable cost, right? After taking the variable cost, very important to note what I'm doing, right? So I am given a contribution margin ratio of what? Of 60%. So what I am going to do, I'm going to multiply this with 100. That, or the 100 is not really that necessary. There are many ways to calculate this thing, right? There are many ways to calculate this thing. So if you decide that no, I feel like the 100 would be much more of a long drive for me, it's not a problem. You could take this amount and you divide by the 40%. Why are you dividing by the 40%? Essentially, you are taking 100, right? And you are removing what? You are removing the 60%. Okay, so now let's break it down mathematically. So let's break it down mathematically. So let's break this thing down. Remember, contribution margin percentage is contribution margin over selling price. So if we are breaking this down mathematically, so it means what are we going to do? So we have the 60%. So we are going to equal this to what? To my contribution margin, which I don't have, over the selling price, which I don't have. So let's break down. What is contribution margin? It is selling price less variable cost, right? You see what I've done there? Now I have variable cost. My variable cost is 6,070. Now I have a basic mathematic formula to solve. Not a basic, but you get me, right? So now when you have this mathematic formula to solve, we are not mathematicians, right? We are not mathematicians. We are not. I'm also not a mathematician, right? I'd be lying if I said I am. I'm definitely not a mathematician. So if you have this, now you guys can get the answer. I think you guys can get the answer if you have this, right? So that's 60% there. So that's what you could do to solve the answer, right? So since I am not a mathematician, I already know that when we are given something like this, where I'm only left with the selling price that I need to find, what you take, right? So since most of you guys are like me, are not mathematicians, what we do, we take the variable cost, right? Take the variable cost and we take the variable cost and we divide by the percentage that is remaining from the contribution margin. So the percentage that's remaining from the contribution. So that is what we do. We are not going to solve that formula mathematically. So it's going to stretch our minds. So now what we do that. So as I come back here, with the retail section, I am going to take this 6,070 and I am going to divide by the 40%, right? So this gives me an amount of 15,175, right? Now, for the online, I am going to take the variable cost 6,470, divide by the 0.4. Let's see what we get. We get 16,175. So this would be my sales, 16,175. Now, variable cost we deduct. Variable cost is a cost we deduct. Selling price is income. That's why it's in positive, right? Now, from here, what we do, we are going to get the full amount, right? So, or not the full amount, the final answer rather. So our final answer would be what? The contribution margin. That is what we were looking for, right? So we will take this 15,175 less the 60,070. This gives me 9,105. Now, same thing that I do here, right? Take the 16,175 less the 6,470. This gives me 9,705. This is my contribution. This is what I was looking for, right? So now, let me see who's in the participant. Any questions now? Any questions on your side?
Can I ask?
Yes.
So if we are calculating sales and then we are given production units and a selling price, but then we are still given the percentage of the margin, what is it? Contribution margin percentage. How
Yes.
are we going to tackle that one?
Okay, to make easier for you and me, let's work. Please give me the amount. Let's make an example. So let's create an
So,
example.
okay, I'm going to say 5,000 production units.
5,000, you are saying it is our production unit.
Yes.
Yes.
And then selling price per unit, 100 rands.
Okay.
And then contribution margin percentage, 25%.
Okay.
Yes. So now when we're calculating sales, how do we then factor that 25%? I'm just thinking, I'm not sure if it's the right question, but I'm just thinking about it.
When you're calculating what sales,
Yes. Selling price, sorry.
selling price you are given is 100 rand.
Okay, then I'm thinking, no, then my thinking is not correct. Yeah, I hear you.
Okay. Not a problem. Maybe if you are able to think of something else, you are more than welcome to send me a
Or
message.
if, no, sorry, if we are calculating sales, not selling price, if we were calculating sales, does that 25% contribute anything there?
Do we have sales unit? I mean sales
Yes.
price. I mean sales unit rather.
Uh-huh.
Do we have sales unit?
Yes, we do.
What would be our sales unit?
Sales units would be 5,000.
Okay, so you are saying production and sales units is 5,000.
Uh-huh.
So what you would do here, you would take the 5,000 and you would multiply with the 100 rand, and then you would
Uh-huh.
get your sales value, total sales value.
Uh-huh.
Yes, that's what you're going to do. So here you would arrive at 500,000,
Okay. No, thank you.
your sales value. Yeah. Okay. Um,
Thank you.
let me see. Yeah. Um, let me see if I can push this lesson to answer the other required. Let me see. Okay. I wanted to do part 2 and part 3, but I don't think I would have enough time to do it. As I have another class at 6:30 now, so I don't want to rush whatever that I'm doing, right? I don't think it might be possible for me to finish around 6:20. I don't think. Okay. So unfortunately, so this brings us to the end of today's class. An hour, 30 minutes, not bad. So, if there are no further questions, this brings us to the end of today's class. Enjoy the rest of your Sunday. We'll meet again on the next class. Everyone.
Thank you. Goodbye.